Shares of PayPal falling after reporting a Q4 beat, but guidance came short of expectations, as you just heard Kate Rooney break down. Joining us now to discuss further, Dan Dolev from Mizuho. Dan, last month, I guess now, ahead of the Innovation Day, you downgraded PayPal. You've been bearish. Your thoughts on what we just heard in terms of account slowdown, growth slowdown, and a big miss on guidance?
Hey, I always hate taking a victory lap, but it feels a little bit like that right now. Look, if you think about this, we look at two important KPIs. That's branded checkout, which decelerated 5% versus 6% in the last quarter, and unbranded, which was sort of the claim to fame up until now. That's where they were, going against Adyen. That also decelerated a couple of points. It's at 29 now. So to me, and obviously what Kate was saying about EPS being really, really weak for the guide. I guess not enough, cost cutting or what have you. But to me, those two KPIs are the most important ones because they're deep fundamental and they show you kind of how they can compete with Apple Pay.
Okay. I mean, when it comes to PayPal, this is a turnaround story, right? You got a new CEO at the helm, been there for a couple of months. So in terms of guidance, there's really nothing to lose if you're looking to helm a new turnaround strategy, to be conservative with guidance. So to play devil's advocate here, could this potentially be a bottom for this name? When will we know that's the case?
I think we will know that if we start seeing kind of more clarity on, why branded checkout is slowing, right? Because the bottom for the stock will be when we figure out that whether or not they can actually, offset some of the headwind from Apple Pay. This is the biggest overhang on the stock. And until that gets resolved, I don't think we're going to get a bottom in the stock because it'll just be a value trap. So we want to see why growth is decelerating and why they're not really guiding to a revenue number, unless I missed it. I just saw an EPS number, but I only had a few minutes to look into that.
Dan, it's not just Apple that I'm concerned about, Apple Pay. It's Klarna, Affirm, which I know that you like, because they're looking at faster online checkout options, not just for the convenience aspect, but to be able to use data more effectively to steer retailers into using their services. To what degree is PayPal able to compete there, do you think? And to what degree do they face risk from names like that?
I think they face a lot of risk because at the end of the day, and this is a great question, at the end of the day, I can't talk about Klarna, they're private, but Affirm, they take credit risk, right? So they're in the business of taking credit risk, and they're the last mile relationship. Essentially, PayPal is sort of a middleman between you and your bank or you and your credit card. So, the fate of all middlemen is to get squeezed. And that's why it's going to be increasingly harder for PayPal to go and compete against Affirm because they're getting sort of a competitive edge in understanding risk. And that last mile relationship is enormously important. And this is what is sort of going away from PayPal over time because of the age demographic issue that we highlighted, that young people don't really use it as much as older people.